Hey, this is Matt from InvestiQuant. Today is Wednesday, October 19, 2022. Before I get started here today, I want to remind you guys our webinar is today after the close at 4:30 p.m. Eastern Time. We will be talking about our auto trading programs in this webinar. So if you'd like to learn more about how we do auto trading, we're having a great month here in October for our auto trading and a great year for auto trading programs as well. So join us after the close. You can get to the link underneath this video, InvestiQuant.com/webinar. That'll bring you to this page. Fill out your name and email, and that will get you a link to join us after the close. All right, let's hop into today's daily IQ study. What we're going to be looking at today is what has happened historically following a day that had a giant up gap. So yesterday we had a gap of 78 points in the S&P futures when we opened up, and from there we sold off and then sold off most of the morning and then kind of bounced into the close. So we put in a nice little tail on the daily candlestick, but we had a giant up gap, ended up with a red candlestick for the day, and we'll be looking at that largest up gap in 20 sessions. Let me go ahead and grab all four instruments here. The setup is based upon entering long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently the markets are trading lower in the overnight session. I'm going to grab the opening filters gap down here. The next thing I'm going to do is go to the price patterns library, and I'm going to grab the information around yesterday's sizable up gap. And that's going to be in the unique move section. If I go to the active today, it's going to be the bottom option here, day after largest up gap in 20 days. Next thing I'm going to do is go to the indicators library and put us below a 200-day simple moving average. I'm just going to use the 200 because I want to keep as many samples as possible, and this pattern can get thin on samples if you get too specific with it. All right, now I'm going to click View Results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you are gapping down in the prior session, had the largest up gap of the past 20 trading days, and closed below a 200-day simple moving average. Historically, we have 38 samples in the S&P. We've got 27 in the NASDAQ, 41 in the Dow, 53 in the Russell. Win rates on these coming in a little light. S&P coming in at 47% of these have closed above the opening print for the day. The NASDAQ 41%, the Dow 51%, the Russell 43%. If we look at the average moves, the average loss larger than the average win in the S&P, and that is also the case for the other instruments as well. So NASDAQ, Dow, and Russell all have larger average losses compared to their average wins. So historically speaking, this pattern has led to prices that close further beyond the open to the downside than they do to the upside. And win rates on these are kind of neutral, a little bit weak. NASDAQ, the weakest of the group here, at 41%. 47 is a little bit lighter here, or a little bit more neutral for the ES. And you've got Dow just over 51%. So not the weakest on win rates that we've ever seen, but they're certainly not strong there. Hopefully you found that helpful. Good luck today. We will see you next time.